stop from coming here today, that would be a bad example for the children at home. If I let a little case of the sniffles and a sore throat keep me down, right? My engineer this morning, Todd, I almost bailed on you. I almost called you several times and said, I can't do this. But I pressed in, right, through adversity and through an hour of coughing, and I'm here. Because taxation, as we all know, with representation, has not been such a good idea either. And somebody's got to be a beacon of hope out there telling the truth about what they're saying about this tax law. This week, we prepared and filed about another, I don't know the exact count. I was going to count them yesterday, but it got late. We didn't. But I'm going to say we prepared and filed somewhere around 30, 35 tax returns. And I have yet to see a person, let me say it again, yet to see a person pay more tax or receive a smaller refund relative to last year's tax return. Yet, nobody. I have yet to see anybody pay more tax. And I've had people max out the $10,000 SALT, which is the state and local tax barrier, which supposedly is the worst thing about this tax bill and is making this tax bill horrible, right? Even that person paid way less in taxes than they did last year. My name is Gilbert Carmona. The program is Gilbert Talks Taxes. I am an enrolled agent. An enrolled agent is a person licensed, well, we say enrolled to represent taxpayers, but my authority comes from the Internal Revenue Service. Like CPAs and tax attorneys, we are the only three categories that are allowed to represent taxpayers in all matters before the Internal Revenue Service. My telephone number is 828-289-9300. You can call me here at the studio. Todd or one of my able helpers will take a message, and if I can answer your question on the air, I will. You can email me, gilbert@gilbertcarmona.com. That's gilbert@gilbertcarmona.com. Again, my office number, 828-289-9300. The number here is 287-3356. Sorry, I am sipping water just to keep it up. It's the allergies. I mean, the weather's been beautiful. It's been spring. As those of you that come to my office know, I love flowers. And I have got a bed of them every year, and the pansies are doing beautiful. But along with flowers comes allergies, but it's a small price to pay. And the roses are in bloom. Everything is in bloom, Todd. It's hard to believe. And we had a little bit of a frost 2 days ago on the ground in the morning, but no. Just like me, they persevered. They pressed through, and they're doing beautiful. So I'm going to get into some of the IRS in the news. Now, last week, some people actually a person stopped by the studio to tell me how good that program was last week, and I got comments during the week and Saturday. I got several phone calls about it. So those of you that asked, no, that was not. I was serious. Let me get back to the topic. I just talked about SALT. SALT is on Schedule A, state and local taxes. Okay, Schedule A. Now, the big deal with Schedule A this year is that most taxpayers are not going to file Schedule A. Why? Because the standard deduction is doubled under the new law. Last year, if you filed single, your standard deduction was $6,000. Actually, $6,000 and change. This year, it's $12,000. If you're married filing jointly, last year it was $12,000 and some change. This year, it's $24,000. And if you're over 65, you get what I call the senior bump. You get $1,300. So two people married filing joint, over 65, both of them over 65, your standard deduction is $26,600. With a standard deduction that high, unless you've got major property taxes, or you're a very large donor, or you've got a house with a very large mortgage interest payment, you are not going to make Schedule A, which Schedule A is when you say I itemize. Okay, I file an itemized tax return. Well, you itemize because you've gone over the standard deduction. So this year, with it being so high, they're not doing it. Well, there is a whole group of people, predominantly people that live in New York, Chicago, your larger cities up north, California, where property values are just astronomical. Now, don't get me wrong, there's people in Florida and people in Atlanta that have multi-million-dollar properties that pay a lot of tax. But when we think of it as a tax base, as a group of people, we're usually thinking New York, we're thinking Chicago, we're thinking, Philadelphia, your bigger cities, and California. Well, I've heard stories in California that you cannot buy in Los Angeles metro area, in any decent neighborhood. You cannot buy a 3-2 ranch for under $750,000. That's just the going rate. So the property taxes that go with that are very high, and your mortgage interest payment is very high. So what this new tax bill does is it caps the mortgage deduction limit of interest at $750,000, and it caps the state and local taxes at $10,000. Here in our market, that's affecting very, very few people. Now, there are some people that may have some large land holdings that are paying a lot of property tax just because they have a lot of land, okay? But if it's a farm, that's a whole other topic, and most people that have that kind of land usually have a farm or some kind of a business. Very few private holders of a lot of real estate, and rural real estate just isn't taxed that high. But anyway, that's a whole other topic. So it caps at $10,000. So these people that would normally get an itemized deduction of, let's just say, with their property tax. I've told the story many times about the man in New York who was moving down here, and he called me, wanted me to kind of, wanted me to be his hound dog and get him some facts and things on property taxes and things. And when I told him the property tax for the house he was looking at was going to be somewhere around $1,600, he said, well, that's not bad, $1,600 a month. I said, no, $1,600 a year. The man said he paid $20,000 a year in property taxes alone. That was it, on top of his mortgage and everything else. So around here, that $10,000 is not a big deal, but those people, with the property taxes they pay, the interest they pay, they're getting a $50,000, $60,000 deduction from their taxes. This is really big, because what it does is it reduces your taxable income, okay? And they are, so now they're paying more tax because they can't itemize. So they are, of course, it's Donald Trump's fault. Because everything is Donald Trump's fault. Okay, yeah, everything. Everything. If there's a solar eclipse tomorrow, it is his fault. So California, New York, and New Jersey are now, they're not going to have tax departments anymore. They're going to have charitable organizations. And because see, charity has not been capped. So you're not paying taxes, you're now donating to your local government. You're not a taxpayer anymore, you're a donor. Yes, I did say this last week, it is not a joke, it is happening. The IRS sent them, well, the IRS put them on notice. That's how I found out about it, because I, as a practitioner, get IRS news, and the IRS is putting all of us on notice that this is a scheme, as they call it. We would say a scam. They call it a scheme, and they said that they're going to be aggressively watching this to see what happens. And California, and they're saying, well, we're going to do it, sue us, okay? So, and nobody in the media is saying a thing about this. It hasn't even made the news. Most people haven't even heard about it. You know, and I don't know if they're going to allow that to be retroactive for this year, or if they're going to go for next year, or if they're going to do it next year and let you go back and amend this year, or if they're just going to end up doing it at the state level to give people some state level tax relief. I don't know what they're going to do, but this is going to be very, very interesting to watch for those of us in the industry, because like I said, the media won't give it any play at all. And I'm convinced the reason they keep saying all this stuff that they don't understand, or either they're willfully lying or they're just being willfully ignorant. It's one or the other. Because either they're willfully lying and saying this is just a horrible tax code, it's really bad, or they're just ignorant and don't understand the concept of paying less taxes and getting a bigger check every week. Because what I'm finding typically with the people that are getting, okay, they're getting a smaller refund, and it hasn't been that much smaller. It's been, I think the smallest one that I had was like, it was like $900 or $800 smaller. Yet when we went back and looked at the tax return line by line, he paid almost $3,000 less in taxes. Thursday, I had a man, the biggest one yet, he paid $5,052 less in taxes and made $20,000 more. Okay, so tell me where that's a bad tax code. I mean, just explain this to me, please. It was like his check was like $97 bigger every week. And he noticed that. He knew that. He said, my check was bigger relative to everything else I had. He said, so he was afraid he was going to have to pay because he heard so much in the news about paying. Now, he did get a smaller refund compared to last year's, but it wasn't a big deal. I mean, he just was like, I paid $5,000 less. I said $5,052, sir, to be exact. Okay, we're accountants. Numbers matter. So I feel like I'm defending the thing, but I just hate to see on the news where they're just saying it's so horrible. It's not, folks. It's not. So people come and I do their tax returns and I tell them what they're getting back, and there's this sigh of relief, and I'm like, why are you? What was that all about? Now I know what it is. Now I know they've been watching the news, and so I heard and people are saying and there's people saying that they're not getting any money back. So my answer to that is, bring me their tax return. I want to see it. Nobody has shown up with a tax return yet. And I've been saying it for weeks now. Bring me that tax return. Bring it to me. And if you're worried that I'll get some confidential information, take a Sharpie and white out everything. And black out everything. I'm sorry. Black out everything. But bring me that tax return. I want to see it. That's what I keep saying. Todd, where's the time go? It's already 13 after. My engineer this morning, Todd. Good morning, Todd. I didn't welcome the people. www.WCAB59.com. Those of you watching us live streaming, Todd got it up and running. It looks great. This is wonderful. Let's go ahead and take the first break, and I'm going to come back and talk about whatever I decide to talk about. I don't know. I planned the program out. And one phone call changes everything. One text changes everything. This is Gilbert Talks Taxes, WCAB 590 AM, 100.9 FM.
Hi there. This is Kimberly, and I'm here to tell you about Peterson's Auto Service and Detail Shop. As a woman, I'm often apprehensive about taking my car to a dirty service garage. But you can be assured that Peterson's, located at 478 Butler Road, Forest City, has an incredibly clean and safe environment where you get high-quality service at a great price. Peterson's was voted Rutherford County's best auto service 3 years in a row. So take your car to Peterson's for brakes, oil change, North Carolina inspection, tire rotation, headlight lens restoration, scratch removal, and meticulous auto detailing. That's Peterson's at 478 Butler Road, Forest City. You can call him for an appointment at 245-8889.
This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300.
We are back. Gilbert Talks Taxes, WCAB AM 590 FM 100.9. See, Todd, I got up, I came, I got ready, and my voice is getting better by the minute. I could not stay at home today. It would have been a bad example. A bad example. Good news from the IRS. So I'm Gilbert Carmona. I stopped there. My email address, gilbert@gilbertcarmona.com. My office number, 828-289-9300. You can call me here at the station, ask a question. If you need, 828-287-3356. So a little bit of good news from the IRS. They're just sharing the love. I can feel it. IRS expands. This is from the IRS. IRS expands penalty waiver to those whose tax withholding and estimated tax payments fell short in 2018. The key threshold was lowered to 80%. Okay, let me translate that for you. Let me say that in real language. What happens is those of you that are self-employed or have investment income and you pay estimated taxes so that at the end of the year you don't get a huge bill, or because you have to. So if you owe the IRS more than $1,000, you're supposed to make estimated tax payments or have a penalty. So how they gauge next year's estimated tax payments has been by taking 90% of what you owe this year, if it's over $1,000, and breaking it into 4 quarters, 4 equal payments, and you make those payments. April 15th, June 15th, September 15th, and then you make the January 15th of the following year for this year. Okay, and those of you that do that know the drill. You do it every year. It's not only is it law, you're supposed to. There's a penalty for not doing it. It just really keeps that bill down for your estimated filers. My biggest client, my biggest client pays just short of $1 million in estimated payments annually. So and it's good because that would be a big check to write. Plus the penalty would be huge. So the IRS, because there's been some confusion early on with this law, and the tax brackets were moved, the marginal rate shifted. We've had a whole shuffling of the tax brackets. There was some confusion. Some people actually fell short of their estimated tax payments. I haven't had one yet, but then usually those people that know they owe every year. I start seeing those people now towards the end of March and beginning of April. Those are the ones that come in at the end because they know, and we do it every year. And a lot of those people we extend because they are self-employed, they have investments, and investments are notorious for sending out corrected 1099s. As a matter of fact, Wells Fargo, we just started getting corrected 1099s because the law says they have to have these out by February 31st. I'm sorry, they have to have them out by January 31st. They have to get them into the IRS. They have to get them out to the taxpayers by January 31st. And when they're preparing them, for final, they'll find mistakes or adjustments will come in or things, so they send corrected. So typically we get a whole wave of those in May. So instead of going back and amending the tax return, we just extend, wait for May, June, make sure we have all our corrected 1099s, and then in June, July, we file those tax returns. So they're always mailing estimated tax payments. So the brackets we used were shifted, they were changed, and there was some confusion about what the actual numbers were. So the IRS, in their benevolence, has actually lowered the bracket twice. Instead of it being 90% of the estimated amount that you paid this, or not of the amount that you paid this year. The usual percentage threshold is 90% to avoid the penalty. The IRS on January 16th, they actually lowered it to 85%. But they have found that wasn't enough. So they issued another guidance on the 22nd of March. Yesterday, they issued another guidance saying they're going to lower it to 80%. And this is major. Like I said, I've got, like the client I have that pays $1 million in estimated taxes. And I've got clients that pay $100,000, $200,000 in estimated taxes. So this is major. This is really major because it's going to just save them some real money. The Internal Revenue Service, the commissioner said, we heard the concerns from taxpayers and others in the tax community, and we made this adjustment in an effort to be responsive to a unique scenario this year, said IRS Commissioner Chuck Rettig. The expanded penalty waiver will help many taxpayers who didn't have enough tax withheld. We continue to urge people to check their withholding again this year to make sure they are having the right amount of tax withheld. Now, that gets us into a whole other topic, which I'm going to talk about next. But let me finish his quote. This means that the IRS is now waiving the estimated tax payment for any taxpayer who paid at least 80% of their total tax liability during the year through federal income tax withholding or quarterly estimated tax payments, or a combination of the two. Today's revised waiver computation will be integrated into commercially available tax software and reflected in the forthcoming revision of the instructions for Form 2210, Todd. I know you like to read those. Underpayment of estimated tax by individuals, estates, and trusts. That's the standard form we read every year to get our tax brackets. Taxpayers who have already filed their 2018 but qualify for this expanded relief may claim a refund by filing Form 843, which is different. Normally you file a 1040X, an amended return form, but they're telling us to file Form 843, which is a claim for refund and request for abatement, and include the statement. So my software will probably write this automatically. I'm guessing I haven't done one yet. This just happened yesterday. And include the statement 80% waiver of estimated tax penalty. This form cannot be filed electronically. It's going to be a paper file. Amended returns are a paper file for individuals anyway, so that's normal. That's normal. It goes on and it gives some more information. So if you filed your tax return and you had either from your withholding, because you didn't withhold enough, or from your estimated tax payments and you had to pay a penalty for under withholding, this relief is available to you. Now that's the plus side. The downside is this. The penalty is really not that much. It's actually kind of, as far as IRS penalties go, the penalty for underwithholding and underestimating your estimated tax payments is really kind of low. So I actually have had businessmen say they would rather not pay estimated tax payments because they can't borrow money from the bank that cheap. And they know they're going to pay this amount of money because they do it every year. So they will pay $8, $9, $10, $12, $15,000. They just, it would negatively impact their cash flow to go ahead and pay quarterly payments. And the penalty, again, is not that high. It's a couple of $100 for $10,000 or whatever the number is. I have to calculate it out. But it's not a lot, and they will actually just as soon do that. So that brings up that discussion. But it's worth it. Hey, I would amend a tax return over $5. But that's me. Let's go ahead. No, we still got a little bit of time here. Now, so in their benevolence, they're going to go ahead and do that. And on the other side, they just issued another warning to people that they are confiscating well, they're not confiscating. They are letting Homeland Security know that if you owe money and you have seriously delinquent tax debts, they are going to notify the State Department and they are going to invalidate your passport. They're going to revoke your passport, or they're going to limit ability to travel outside the United States. I guess that's a polite way of saying they're going to take your passport away. They're going to revoke your passport or limit ability to travel outside the United States. So if you're a business person, who this is going to impact is business people that do travel, global travel. This isn't, I don't know too many vacationers that owe the IRS over $52,000. Typically, it's business people that are stuck with some kind of business debt or a business tax debt. So if they're liable for this. So if you owe the IRS more than $52,000, and you are in their seriously delinquent tax debt list, they are going to notify the State Department, and the State Department is going to freeze your passport. You will not be able to travel outside the country. Now, the process is the IRS certifies the taxpayer to the State Department. So it's a serious process. They actually certify you. as owing a seriously delinquent debt. Now, you will receive a notice of this. So it's not like you're going to go get a visa or something and you're going to plane and they're going to tell you can't. You will know. You're going to get notice CP 508C. C is in Charlie, from the IRS. The notice explains what steps you need to take to resolve the debt. So you can resolve this and get this removed from there. But they're letting us know again, probably because as we get into the spring break time, this is a heavy travel season, and they want people very aware of this. Now, a lot of times, an installment agreement is all, if you can't pay the total amount, or if you have, or if it's a situation, an ongoing, back and forth you're having with the IRS that may be resolved someday. I have a case right now that's been going on for 3 years. And even though they said I'm right, technically I won the case, now I'm in round 2 to get the money released because there's some technicalities there. All on the IRS's side, not on my side. So even though you win the case, doesn't mean the check is in the mail with that crowd. It's tough. It's a tough road to hoe with them. So, but a lot of times if you get in an installment agreement and keep it current, they'll go ahead and remove the certification on your passport and they'll release it. Or offer compromise or any kind of a settlement you're in, just any collection proceedings. So there are ways, not necessarily they want their money. And if it is a situation you're in, they'll look at it and they'll understand and they'll release it. Okay, so wanted to get that out of the way. Wanted to warn those people, Todd. Because nothing worse than showing up at the airport and not being able to get on your plane. Let's go ahead and take a quick break here. Let me get some fresh water, and we will be right back. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous. This is Gilbert. I want to tell you about Jesse James Railroad Express at 531 Railroad Avenue in Rutherfordton. It's a great place. Jesse's a good friend of mine, and I encourage you to stop by and support him. On Mondays, he's doing a 99-cent hot dog, mustard, chili, and onions. When you go, tell him Mr. Fabulous himself sent you.
We are back. WCAB 590 AM, 100.9 FM. Those of you live streaming us at www.wcab59.com. Welcome. Good morning. Good morning, everyone. So, but I just started the program, right? Right. I just went hot right away, didn't I? Whew. There is a lot going on. There is just a lot going on. Well, we're winding down already. It's hard to believe. It's like we already started. We've got approximately 3 weeks left now. This year, the 15th, as those of you know, is on a Monday. The 15th of April is on a Monday, the last day to file your tax return. Get it into the IRS by midnight. On the 15th, you can put it in the mail, have it post-dated, although I don't really recommend that. Those of you that are going to be mailing yours in. Now, I am an electronic return originator by law as an enrolled agent, a tax preparer. The law says if you file more than 2 tax returns, they have to be electronically mandated, electronically filed. So, but I am my own ERO, so it leaves my computer and goes right to the IRS. So the April 15th. Now, if you submit your tax return that day and it gets rejected, because I'll get an ERO reject for whatever reason. There could be a number of reasons you get a reject. Sometimes it's just numbers that got put in wrong or misspellings or things like that. It's not a problem. It comes right back. We just resend it. You do have 10 days to perfect the tax return, and it's still considered timely filed, as long as you have that time stamp. this timestamp form. It's a 9325, which automatically generates when I e-file that I sent it off with its unique identifying number. You're good to go. So you have 10 days to perfect that, but you never can tell when it'll reject. So the 15th. So we are going to do our last program. Todd, you know where I'm going with this, right? Our last program is going to be Saturday the 13th. So we right now, tentatively, we're still working out some details, but tentatively we are doing, what are we doing, Todd? A live remote. From where? Just want to make sure you have it in your calendar. From where? NC Tractor. We're going to be over there with Phil, 8 in the morning. We're going to have donuts and coffee. Gilbert and Todd, you'll be able to be there, right? With me? Gilbert and Todd, donuts and coffee, Saturday, 8 a.m. It doesn't get better than that, I don't think. And Phil. And Phil's going to be there with us. So we're working out some of the details. Rafael and you, did he contact you yet?
We talked yesterday.
You talked yesterday. See, I'm telling you, he's the best. He is good. We're talking about doing the live feed. For those of you, www.wcab59.com, you will be able to see us there live. They're working on how we can do that. And can we just run a big long cable, just like a half a mile cable from there to here? He's going to find one. So you go right with it. That's what I like about you. You go right with it. So we're excited about that. But that will be the last program, April 13th. And feel free to stop by, please, or at least drive by and honk your horn. Distract us or something. Or feel free to stop by. And then after the program, he's going to have an open house, and he's going to have hot dogs and things, and he's getting a hold of that's his part. 9 o'clock, I'm done. So I'm really excited about doing this. We've been supporting him since the fire, and really praying for him, and he's been doing great. He said he's been very busy. Business has been good there, and I love his new location. I love the way it looks there, and I love those red tractors. You drive by, they just look happy. I don't know any other way to say it. They just look happy. Okay, I talked about this a couple of weeks ago. I'm going to talk about it again. If you've had the IRS holds your refund for whatever reason. Usually it is because you have a debt. Now there are two kinds of debt. There's debt to another governmental agency, or there is debt that is non-governmental agency. That one would be child support is typically the biggest one. If you owe child support, they can and they do keep your refund. Governmental agency, an example of that one is typically student loans. Student loans. People wonder why they're so liberal and generous with student loans, why they're so easy to get. I mean, literally, a 17, 18-year-old can show up on a college campus and bam, be $100,000 in debt just by signing a few forms. Now that should be criminal, but it's not, unfortunately, and they're allowed to do it. So they get in debt. Why? Because they will lock your Social Security down for the rest of your working life until you pay that back. Now another little known debt that surprised, I've had some people, this happened to some people this year and they were surprised, is if you get a Pell Grant, Pell, P-E-L-L, it's grant, it's an undergraduate grant. As soon as you get your bachelor's degree, you no longer qualify for a Pell Grant, but you get your Pell Grant, and it's a good amount of money. If you go here to any of our community colleges, isothermal, Cleveland, it's enough to pay for your semester of full-time load, books, supplies, and you even get some cash back because it's actually your money. And you get this grant, and it's not taxable. Pell Grants are not taxable. It's tax-free money to go to school. But nothing is free from the government. If you do not finish your classes, you enroll, you take the money, you drop out, you owe that money back. And as one man said, well, they're just going to have to find me. Well, they did find him. They took it from his refund. So they will do that. Now, I've had a situation this year where a man owed student loan money, and his refund was much larger than what he owed, because he knew he owed this, and he was totally fine with them taking this refund, but he was expecting, and I'm just making some numbers up, he owed $5,000, let's just say, and he was getting $8,000 back refund. He had earned income tax credit, he had some child tax credit, and he had some withholding. So he was getting around $8,000 back. He owed around $5,000 and change to the U.S. Department of Education. What happened is the IRS sent his entire amount, his entire $8,000 refund to them. So we called the U.S. Department of Education. So what will happen is there will be an adjustment there. They will take their money, and now we're still unclear as to how he's going to get the rest of it. So, but what's supposed to happen is they're supposed to refund him a check, send him a check. That's supposed to be the procedure. So how this works out, I'm curious, but just know that that has been happening. They have been taking the entire amount. And somebody over at U.S. Department of Education told me it's not supposed to happen that way. They're just supposed to get their amount, but it isn't always updated, especially if you're making payments. So if you're sending payments, monthly payments, it may not be totally updated, so there's going to be that lag. You will get it. You will get your money. It's just not going to be in 21 days like he was waiting for. I always say, don't spend your refund until it's in your hand, because a lot of things can happen on the way to the well, and you don't know what's going to happen, and this is one of those things. Now, so if you owe North Carolina money, North Carolina can also take your money from your federal tax refund. And the states are the worst. They're the ones that'll do it right away. Now, some states, and I just found this out a few years ago, Illinois, if you owe parking tickets, now this is not federal, this is strictly state. If you owe parking tickets and you have unpaid court costs for moving violations or other violations, they can take that from your state refund too. So be aware of that can happen. Now, there is a telephone number you can call. It's the Treasury offset number. I've given it before. I have it here on a piece of paper. The Treasury, you can call and you can find out if you have any debt, and they will tell you. But what I found with that tool is it's not, yes, it's accurate. It's been pretty accurate. It doesn't tell you the amount of money, and it doesn't give you any facts. It just tells you that you have this money due, and your tax refund will be held up for it. And then what it does is it gives you a telephone number to call. So it'll tell you you have an offset. It's to the United States Department of Education, and here is the telephone number. And then you have to be on hold for another 3 hours with that department to figure out what happened there. But that's another story. Oh yeah. But the Treasury, let me just get this up here real quick. The Treasury offset telephone number is 800-304-3107. That's 800-304-3107. If you think you have any now, and this is just non-IRS debt. If you have IRS debt, you need to talk to the IRS. And again, if you have North Carolina debt, you need to talk to North Carolina. But they will hold that for that. And child support, oh, that's a tough one, boys. That is a tough one. Boys and girls, because I've seen women that owe child support also. Getting that cleared up a lot of times is hard. Now, North Carolina is actually very good about dealing with these things pretty quick. My experience with North Carolina has been they will settle up really fast. I just had a case where a person was manually making payments on some past North Carolina debt. So he was sending $312 a month to pay this debt off, and he lost track, and he sent a check one month, and the next month sent another check, and then checks started coming to him for $312. So by about the third one, he figured out. By the time they caught up with him, he figured out he was sending too much money. Called them, and sure enough, he had been overpaying. But they sent it back to him right away. They don't like it to sit on their system. Let's go ahead and take our last break, and I'm going to come back, talk about some of the tax fraud things going on out there. Talk about there's still some ways to reduce your tax burden that you may have. A way, really, to reduce your tax burden you may have. Let's take that break. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
This is Gilbert. I've made a career out of helping businesses. Something else that can help businesses is a good sign. Let me tell you about DS Signs and Graphics right here in Spindale. Whether it's outdoor signage, banners, printing, or promotional items, call Alex at 828-286-4900. And remember, a good sign is good business. People come up to me all the time and say, Gilbert, thank you for doing my tax return. I just got my refund. Any idea what I can do with that refund? Oh, yes, I've got an idea. Call NC Tractor and Farm Supply on Railroad Avenue. Get yourself a brand new Massey Ferguson. You can call Phil at 828-429-5008. And when you're talking to Phil, mention you heard it on Gilbert Talks Taxes. You know what he'll do for you? Absolutely nothing. But me, he's going to give me a discount when I buy my Massey Ferguson.
Back! That was a quick one. Gilbert Talks Taxes, WCAB 590 AM, FM 100.9. Live streamers, you out there. Yes, my hair does look fabulous, and my tie looks great. You can see that color. It's a fuchsia. Looks very nice. It'd be a shame if they couldn't see this. I'm glad you got that up and running. Thank you very, very much for tuning in this morning. All of you that listen, I can't say thank you enough. And those of you that have come, I've gotten a lot of new clients this year. We've had several tax preparers in the county here have retired. And so people have been looking for new preparers, and I'm really grateful. Those of you that considered me and have called me and have come to me. Thank you, and thank you very, very much. Huh?
Rumors that I sabotaged the show have been highly exaggerated.
And rumors that Todd sabotaged the show have been highly exaggerated. I don't know anything about that. I'm not. He hasn't. I don't know what I'd do without Todd here at the helm, because it's not me, buddy. I don't know one thing about any of those buttons. There. And now I want to talk about a serious matter here. Rebecca, I'm not going to say any more, no other name, has now ruined every other banana pudding I will ever eat. She brought banana pudding to the office yesterday. That was absolutely unbelievable. And I want to thank you for that. There will never be, it is now the standard. It is now the bar, okay, for good banana pudding. Homemade banana pudding, the real thing. The bar before was set by the ladies down at Greer First Baptist. I went down there to a funeral of a mother of a friend, and we went down there, and after the service they had a spread down in the kitchen that was unbelievable. They had fried chicken, pinto beans, cornbread, and of course banana pudding. And that was the bar, but now a new bar has been set. So I want to thank you, Rebecca, for that, and all of you that have come by and brought us things. Thank you very much. This is the time of the year when all the weight I lost. This is when it starts to come back on. Okay, but hey, it's a small price to pay. Small price to pay. There's a couple of directions I want to go in, but I want to remind everybody. Okay, we're in the home stretch here, April 15th. Now you have until April 15th to fund your IRA. Okay, if you're looking to reduce your tax burden any, you can fund your IRA $5,500, $6,500 if you're over 55, and it will reduce what you owe, plus you're funding your IRA. You're putting money away. You actually have until Monday, April 15th, to do that. And people say, well, I don't have $6,500 laying around. Well, you may want to consider, if you have a other type of investment, possibly that's a non-deferred investment. It's not qualified money, meaning there's no tax implication for moving it around. You might want to consider moving that into an IRA, or if you can open an IRA and move that investment into an IRA. So those things are, you can still do. I'm just a big fan of a traditional IRA. I know there are some other IRA funding techniques. There's people ask me all the time about precious metals and things like that. That's a whole other conversation involving financial planning, which I do not get into that on the show because it's very one-on-one information. It's a very one-on-one conversation. But just a plain old traditional IRA, with just a nice return, is still a good investment. And to do those by April 15th if you're trying to reduce your tax burden. Now, with that said, this is the time of the year where people, I don't want to accuse anybody of, being criminal or trying to do something deliberately wrong. Let me just say, this is the time of the year when people get creative. They get creative about ways to reduce that tax bill. And let me just say one thing: don't. Okay, just don't. And just as you're trying to be creative, just remember Willie Nelson. Okay, creative tax planning cost him $16 million. Okay, and everything he owned. So just be careful. But to see it at the national level, like to see the state of California calling their tax departments charitable organizations, I mean, that takes it all. Anything people come up with now is just as minuscule. But this is the time of the year when people come up with things, and fake charitable donations is a big one. I don't know why it is so popular, because the numbers are so big. The amount of money you have to claim, that it's because if you don't have a history of being a donor or a tither, typically people that are tithers have always been tithers, or they've been tithers for a long time. This is going on 19 years now of doing this. I have never seen a person not giving to charity and then all of a sudden giving $15,000 a year. 10% of their income, whatever that number is. $8,000 a year, $10,000 a year, $30,000 a year. I've never ever seen that. Okay? Either they're givers all along, and this is just part of their life. It's part of what they do. They feel very strong about that. Whatever they give to their church, civic organizations. I have a client who's absolutely all about animals and the Humane Society. She just absolutely thinks that is a cornerstone, what the Humane Society does in our neighborhood and in our community, and she gives a lot of money. She has money to give, so that's wonderful that she feels that way. And she gives a lot of money to the Humane Society and their efforts. Okay, and we're talking like 5-digit a lot. So, but this person's been doing this for a long time. So this is a major warning. If you get audited and all of a sudden you've given nothing, and all of a sudden you're giving $30,000 to whatever charitable organization, and worse than that, a charitable organization that you started 6 months ago. This is very, very suspicious. Please, the IRS says, please avoid the bait. They actually issued a memo on it. The Internal Revenue Service today encourages taxpayers to be alert to scam groups that are telling you to set up charitable organizations. There's also groups that masquerade as charitable organizations. They use tax deduction as a bait. They're fake charities. They lure you. So if it's a fake charity and you make a donation to them, that donation will be, and you make a claim on your tax return, that will be denied. You cannot say, hey, I didn't know. You're supposed to check out their 501c3 status or their charitable status. They could have another, it could be another 50 something, but typically the biggest one is 501c3. Now churches do not have to register. Let me repeat this. Do not have to register for 501c3 status. They do not. They do because they want to. But churches are actually exempt, and I heard this from the head man at the IRS, who is over not-for-profit charitable organizations, the tax return department there. The tax return that they file is a Form 990, and there's many forms of it. Charities that take in less than $50,000 a year only have to file, they literally call it the 990 postcard, and it's literally just a postcard that says that they're still in business, they are still active, and they've had less than $50,000 of charitable donations that year. Boom, that's it. And then you go all the way up to the large tax return that a Salvation Army or a Red Cross would have to file, which is very complicated, very large. These are information returns. There's actually no tax due. They're just letting the IRS know what they did, how much money came in, and what they did with that money. They have to account for it. If a charity comes to you and tells you, I mean, there's all kinds of scams. There was one that was telling people that for every $1 you donate, they've got a mystery donor who will donate 3 or 4 or 2 or whatever, and he doesn't need the tax write-off, so you can have a letter, his letter. So if you gave $1,000, you will get a letter from them saying you gave $4,000 or 10, 40,000. If you give 10, they'll get the letter say 40. That's a scam. That is illegal. They cannot do that because the IRS is going to want to see proof of the money you gave. See, technically, even though their own guidance says that a letter from the donating organization is proof, they are still, it also says in that same publication that you still have to provide proof of funds or article given, ownership of article giving. So if you donated a car or you donated a piano or you donated a whatever, they're going to want to see proof of that. So just be aware. Just be aware. This is the time of the year. They are trolling for people like you that might owe money, and they're trying to tell you anything. So you don't want to get caught in one of these scams. I actually met a man who came to my office for some help who 15 years ago got caught in the, you remember, there was a group of people saying that you could claim you were a sovereign nation. Todd, you could claim that you were a sovereign nation. So you would be like the nation of Todd. And you don't owe taxes because you're a natural man. And that's in quotes. And it is illegal for the IRS to tax you because you're a nation and a natural man. And a lot of people went with this. And a lot of people went to jail over it. Actually, the guy that started the whole thing ended up in jail. There was him and another guy. They went down in the Caribbean and they would find these little atolls. You know, an atoll is just a piece of dirt that sticks up high enough up above sea level, down like in the Gulf, that it's you could actually say that's an island, but it's really not. So they would find these little atolls in different places, and like there's one off Belize called the Blue Hole, and it's basically just a giant cave that part of it sticks up out of the ocean there. And they declared that a nation. So I actually had a man that had an island, 16-acre island there. It was just a piece of land, 4 feet above sea level. And it was a nation, the nation of whatever. And as a nation, the United States government can't tax you. So they're coming up with these schemes, and it's unbelievable what they'll do. Well, every one of them was wrong. And this man that I met, who came to me for help with this matter, 15 years later, he is still having problems because of it. And he really thought, I said, how did anybody talk you into this? He said, when you're greedy, it blinds you. And I thought, isn't that the truth? When you're greedy, it blinds you. Because he at that time was making a lot of money. A lot of money. And he actually didn't pay taxes for about 6 or 7 years with this scheme. And that's what happens, is they're not going to come after you tomorrow, so people think they got away with it. You'll even get your refund. You'll get your money and everything will be good, and you think you got away with it. And then a year goes by, 2 years go by, 3 years go by, and then the hammer comes down. And you've got all those years. The IRS can audit you for 3 years, okay, but if they find suspicious activity, they can easily go back 7, and if they claim that you committed fraud, they can go back to the beginning of time and look at every tax return you ever did. And what happens is most people don't have records from, even I, who am like really obsessed about keeping records. The oldest records I have only go back to 1996 because I keep them. And now I'm digitizing them and shredding them, but so I'm keeping them in digital form. The IRS says you can keep records any way you want, as long as when they want to see them, you can produce paper copies. In my case, it would mean printing all these files I've scanned, which is fine. If they want to see them, I'll print them. And so you can have them any way you want, microfilm, photography, scanning, whatever. So they go back, you have no proof of anything. They can pretty much say whatever they want if you have nothing. So it's that time of the year, and it's the scams, and it's the scams, and it's the scams. They're also warning about calling people. Now, I wanted to do, a couple of minutes left here, I wanted to discuss home use for a business. And this is a really touchy subject, and I think it would be a really boring subject to talk about because there's a lot of little rules. So what I'm going to do is I've actually have put this together in a presentation form, and if anybody wants to know, send me an email, and I'll just send it to you. And we are moving forward with a couple of these publications that we've been working on. It's just they get so big because you start, well, I'll do a little 1-page thing on this, and then it becomes a 4-page thing. So I've actually got 2 of them ready to go. I've got the business use of your home. It's just a short little thing, but it gives you all the nutshell of it. Business use of your home. And I've still got the other one. If you're an employer and you want to know the difference between an employee and an independent contractor and a W-2 employee, I've got a 3-page PDF on that, and I've also got a sample contractor agreement. But the 3 pages hits the 20 points, and it hits the 10-point question, and it's everything pretty much you need to know there. So go ahead and shoot me an email at gilbert@gilbertcarmona.com, and you're either asking for the home office literature or you're asking for the contractor versus employee literature. And I'll be more than happy to send that out to you. Again, gilbert@gilbertcarmona.com. And we're going to get into that. I was going to do a whole show about it, but I thought, about 15 minutes into this, I will have lost them. Because there's a bunch of scenarios. There's just a lot of scenarios when you have a home office. And what are you doing? Are you storing? Are you meeting people? Are you researching? It's just there's a lot of questions, a lot of what ifs. Todd, I think we're done. How much time is left? That's it. Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. See you next week.
Report known to the public possibly as soon as this weekend. The report ending a 22-month investigation.